if you're thinking about relocation, always speak to advisors first, so you
Yes.
know what you're doing, because it
Yeah.
is that classic thing of if you get it wrong, you
Yes.
can't unget it wrong anymore. Welcome to the Tax Compass podcast, navigating UK tax for expats with LSR partners. Welcome to the Tax Compass podcast with LSR partners, with me, Simon Roue, and my business partner, Laura Sam.
Hi.
Today, we're actually taking a bit of a break from our usual format. We're changing things up a bit, and we've actually got an interview, a bit of a chat that I've had with a great guy, Fabrizio, who's an Italian tax specialist. We've worked together throughout the course of the last sort of 15, 16 months. We have one particular client situation, which I've referred to in the past, where someone was looking to break UK tax residence, and she actually ended up going to Italy and is living the life of Riley in Florence. It all looks lovely. It really makes me question my life choices about staying in the UK, but that's a separate thing that I should probably have a think about. What do we talk about? We talk about the various tax regimes that are available in Italy. One of the things that I think, Laura, we found weird is that in the context of so many different regimes being available,
Yeah.
it seems weird, doesn't it, that the UK sort of seems to have moved in the opposite direction, sort of from a political perspective.
Most definitely. Although I don't know whether you spotted anything. I've started to see a few more articles recently already, given the recent abolition of the domicile and remittance basis, um, where there's already suggestions that there might be a bit of backtracking going on.
Yeah. Yeah, I mean,
On
like,
that.
well, certainly estimates at the moment are that between 1,500 and 2,000 non-DOMs have left who otherwise probably wouldn't have done. Certainly the surveys
Yeah.
that have been done. And I think I was doing some background work yesterday on it, and roughly the average tax paid by non-DOMs in the UK is somewhere in the region of 120 to 180,000 quid,
Yeah.
whereas the average taxpayer pays £7,000. And so a policy that, I mean, was instigated under the Tories when George Osborne first started talking about abolishing the non-DOM scheme,
Yeah.
has just taken money out of the treasury. I mean, it seems very weird, doesn't it? Because, like, your average non-dom, they'll be working for an investment bank.
Yeah.
They will have private healthcare through work. They'll send their kids to private school. They're actually not using any sort of state resources, and yet they're contributing a lot into it.
Yeah.
And it seems sort of counterintuitive for a government that is desperate to spend money. It seems
Yeah.
counterintuitive to sort of have that situation. And Italy's a good example, isn't it? Where I know Nassef Sawiris, who's the co-owner of Aston Villa Football Club, and I think is Egypt's richest man,
Yeah.
used to live in the UK, and there was quite a lot in the media, wasn't there? I think it was like a year ago or whatever.
Yeah.
He left and went to, I think, a combination of Italy under their investor visa, flat tax regime,
Yeah.
and I think he spends quite a lot of time in the Middle East as well. So yeah, this conversation with Fabrizio is interesting. It shows that, and one of the things that you'll find interesting in terms of, he mentions actually the way that Italy has got to keep its act together in terms of the competition from a lot of other jurisdictions,
Yeah.
which I thought was a really interesting point, because obviously Italy's good because it's a lovely place, and could you think of anywhere nicer to go and live? But they're conscious of the fact that I mean, Italy, Stoke-on-Trent. I mean, it's still a each to their own, I suppose.
Yeah.
But yeah, it's interesting his comments about that in terms of like having to, there is a view that like Italy's competing with Greece and with Portugal and with the Middle East and Cyprus is another one he mentioned. So yeah, hopefully it's a bit of a departure. Some of the sound quality is probably not quite where it should be, so please bear with us on that. But yeah, this is going to be the first of a series of podcasts we're going to do with our network of partner firms around Europe and the world, to sort of spread things out and look at specific jurisdictions. So yeah, enjoy the interview. So Fabrizio, you focus primarily on sort of cross-border situations with entrepreneurs, high net worth individuals. Maybe it'd be interesting for our listeners, as we said, a lot of our clients and our listeners are considering, sort of mobility. What are you seeing at the moment in terms of the flow of people between the UK and Italy? What are the things that people are looking at that are particularly attractive about the Italian opportunity?
Yes, they are um, seeking a place where they can live easily with their families, and they're picking the most common places for a business relocation, like Milan, Rome, and other big cities. They want to be safe and secure, and they want to be sure that their immigration fulfillments are correctly carried out. But I think one of the main driver they are just aiming at is the personal tax planning, because they do not wish anymore to be subject to a heavy taxation on capital gain or on dividends. So they are really seeking, the scope is twofold: finding the best place to live in terms of climate, weather, lifestyle, and efficiently plan their tax burden.
And what do you? I mean, that's really interesting, isn't it? Because I guess one of the things, and one of the reasons we've worked together on a number of these situations is because the UK is sort of going down a different route in the sense that whilst a lot of European countries, and I guess this spreads into the Middle East as well, see the attraction of providing, sort of attractive tax regimes
Yes.
for high net worth individuals, entrepreneurs, as a really important way of growing their own economies. The UK has taken really a very different route to that approach, and that seems to be a real trend. In terms of in the Italian system, can you give us a brief overview of the tax setups that are available for people to take advantage of in terms of personal taxation?
Yes, 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 absolutely. So, first of all, I need to make a brief introduction, because, as you correctly said, we are not alone. So, Italy is not the only target country for all those people. Okay, we have Portugal, we have Cyprus, and we have also other countries which offer favorable tax regime, and even the high net worth flat tax has been increasing from 100,000 euro to 300,000 euro. So we need even the Italian government has to pay much attention before amending it again, because we really are running into a risk wherein people could pick other countries. But anyway, to give you a brief outline of what's available today in Italy, we have the flat tax of 300,000 euro, which applies to all overseas income except for the sale of qualified shareholding, which cannot be carried out for the first 5 years of application. We have the pensioner tax regime, which is specialized for pensioners, whose tax rate is 7%, provided that these retired people move themselves to the south of Italy in municipalities with less than 20,000 inhabitants, and covers all overseas income. So pension, which basically is a mandatory pension, but also integrative pension, but also the 7% tax is applied on dividends and capital gains. So it's a huge saving, because in comparison with an ordinary regime, dividends and capital gains would have been taxed at 26%. So it's 19% saving. And then for employees and self-employed workers, we have the expatriate regime, uh, whose exemption is around 60% if the employee moves with one child, at least one child, or 50% if he moves himself. But the duration of expatriate regime, for example, is not forever. Okay, it's just for 5 years. And now from 2024 on, there is no renewal possibility after the first 5 years. And there is also an income limit of 600,000 euro. So it is not the same, tax 7 as before 2024. So anytime a UK citizen or another citizen has to make this decision to move to Italy, we need to carefully analyze the whole situation in the, you know, uh, short, medium, and long term.
And what, Fabrizio, in terms of making that move, can you just give us a brief overview of what you need to do in terms of your location to become an Italian tax resident?
Well, yes, residency rules have changed since the beginning of 2024. Now, the main driver is the domicile, but the domicile now is considered as the center of personal interest. So, where is the family actually located? So drivers are domicile, as I described you. Then the physical presence, which should be in Italy for at least 183 days. The habitual abode, which is a kind of concept very similar to the physical presence, but is slightly different. So it's the intention to stay in Italy for at least 183 days. So the habitual abode uh, can exist when, for example, the person who buys an apartment and leaves the apartment here in Italy with intention to come back in the future. Maybe they would like he would like to open a bank account, so they just keep the bank account open. So this integrates the requirement of a big about, and then the enrollment with the municipality of residence. But this requirement is no longer binding. So you can be either enrolled or not enrolled. But if you satisfy the other conditions, you are in any case considered Italian tax resident. From the internal rule, we shift to the international rule. So we need to analyze as well the double tax treaty between Italy and the UK. So the main criteria are always the same, but now in order to solve the conflict in terms of domicile, this is more difficult to solve because the double tax treaty between Italy and the UK refers both to the economic center and to the family center, whereas the Italian concept of domicile only refers to personal interests, so family. So that is the reason why when deciding to relocate to Italy, UK persons and other citizens need to contact a personal tax advisor in order to get a tailored tax advice. Otherwise, they just think of moving to Italy, which is a simple thing, but then maybe they think about so I remained resident in the UK, so I do not have any tax obligation in Italy. Especially after Brexit, this kind of behavior has led to many international assessments because most of people think that they had fulfillments all in the UK and not in Italy. So that is one of the common mistakes they make before coming to our country.
Yeah, I think that's really important, isn't it? And one of the things that you and I are always telling our clients is taking advice before you act is hugely important to make sure you do it correctly.
Yeah.
And then I think the other thing that um, is often a common misconception is that residency rules
Yeah.
are really about moving country, as in you have to actually go and live in Italy, for example. And I think quite often we sometimes open with clients who think that it's sort of you can
Yes. Yes.
to your point, you can sort of live in Italy for a bit, live in the UK for a bit, and decide that you're just going to be tax resident in the UK. But it's actually not about that. It's about actually where you spend your time and what you do.
Yes, 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 yes. And we always also suggest to people that when you apply for a special regime, you need to remain in Italy. You cannot just move to Italy and then think of moving to another country the year after, because that will not be so consistent with a long-term view, a long-term decision. And people always ask our firm to obtain quickly a certificate of residence, and we struggle on that because we need to contact the Italian tax authority. We need to act promptly, but there is a timeline to respect. So we cannot obviously make everyone happy without a true possibility for them to stay in Italy for a long time. So it's a big commitment, and we are here obviously to bring people to respect the rules.
And I think that's interesting. The one thing that I sort of took away from our mutual client situation was um, the fact that whereas in the UK, the visa stroke um, tax system is very, very disassociated. It felt that in the situation we worked on together, the whole thing, because of the regimes, was very linked up in terms of the types of visa that were available. Is that a fair characterization of how it works?
You mean in terms of visa in Italy?
Yeah, visa in Italy
Yes.
linking to the tax regime.
Well, yes, we have a wide variety of visas, but the choice of the right visa is linked both to the estate of the person who is moving, or to the type of work he or she is going to perform in our country. For example, if we have a person who spends, for example, at least 183 days in Italy in a remote working mode, and then he travels all around Europe for the remaining part of the year, maybe the right choice is applying for a digital nomad visa. Rather than if we have an investment fund manager with a huge amount of money available, a huge estate to manage, maybe it could be more into investing 500,000 euro in an Italian blue chip. So we propose the investor visa. But there are obviously advantages and drawbacks in both cases. For example, the digital nomad visa has to be renewed every year, whereas the investor visa involves a higher commitment in terms of making an investment and keeping it in the portfolio for at least 2 years. And the investments, as you may know, can go up and down depending on market conditions. So it is better advising our net worth individual maybe to get a blue chip which pays out dividends on a yearly basis. And or we can have an elective residency visa, which is simpler, mm, basically. But everything depends on the availabilities, on the financial availabilities of the person, and on the timeline he expects to stay in our country. But there is no tax planning without a proper immigration planning. That is a concept I would like to stress.
Yeah, I think that's such a good point. It's that whole linkage of looking at the regimes that are available and making sure that you've taken enough time to consider them, because as you say, there's quite often financial consequences. So the investor visa is a really good example where, and the UK has toyed with this idea um, for some time in terms of these sorts of regimes to get encourage people to invest into, UK companies or whatever. But in the Italian situation we looked at, looking back on it, because the starting place of that whole process was a bit of a panic,
Yeah.
it was great the way that we were able to work together to eventually be able to resolve it in a way that worked for Italy and the UK. But I must admit that there were times during that process where it sort of felt that we were right up against the sort of the sort of typical issues that you get. And I think one of the things that was so refreshing with us working together was that even though we're separate firms, I think we linked up very well
Yeah.
and were able to sort of sort our client out. And as we both know, I hear you had lunch last week.
Yes.
But one of the things that was really good, I think, was that it's obviously quite nerve-wracking for people who aren't familiar with the setup. And so I think we always just have to say to people who are considering it, the best thing you can do as a starting point is to take some advice
Yeah.
and make sure you're linked up
Yeah.
both ends.
And another important issue that I would like to mention is that, for example, for entrepreneurs who decide to move to Italy, they often ask us about potential permanent establishment risks. And this is very important because if they want to market their services in our country, it is not sufficient to get the right permit or to find the right tax regime to apply for, but they should also pay attention to the business they carry out in our country. Because if activities are not subsidiary or not aimed at a simple advertising, but they are actually operational and they aim at selling products or services in our country, even in case of a remote working, there may be grounds for the Italian tax authority to tell them that they are building a permanent establishment in our country. And the new OECD rules have to be carefully analyzed, because even working from home, if a room is available for the foreign employer, so by letting is be working in our country, that could bring to a permanent establishment assessment.
Yeah, and I think it's again one of those things where thinking about the sort of practical takeaways, it is understanding that every action that you take can have consequences. So I think that last one about a room where you work as a self-employed person can still really have implications. And so one of the things that so often I think people rightly don't necessarily think about upfront is just it's complicated. Once you've done something, you can't necessarily undo it. We have this so much with residency situations in the UK where I had a client a while back who'd spent 2 days too many in the UK
No.
and ended up with an additional £20,000 tax bill.
Yes.
And it's the same stuff. You've got a plan. You've got to make sure you know what you're doing before you do it.
Yes, yes, yes. And to get back to three key points, as you pointed out in the summary, for anyone considering a move to Italy, I would say, um, defining very well the targets of relocation to Italy. Do I want to stay in Italy in the long term? Yes. Okay. So I need to efficiently plan my move by choosing the right tax regime which covers that timeline. Okay. And they have to look at their residency in Italy and outside of Italy in order to avoid um, uh, possible problems between so in a cross-border situation. And then do not think to be uh, only liable for UK taxation or Italian taxation. They could be liable for both uh, taxation. So, and we are here to coordinate with you in order to avoid this type of troubles. And so, another common mistake is that they maybe think they do not need any tax advisor at all. Okay. And they just think I'm doing by myself, and then they're getting assessed by the Italian tax authority for any reason. So the way we work, we always propose a first assessment phase where we check all documents available before the move. Then we propose this service as part of our procedure. Then we have the implementation phase when a tax regime is properly chosen. So in case of the 300,000 euro tax, we file the ruling with the Italian tax authority. And then we have the ongoing phase when the regime is already chosen. So we manage the tax compliance and other consulting activities which may arise in the future.
Perfect. And as I say, with our mutual client, I think it worked really, really well. And as I say, we continue to see a flow of people interested in moving to Italy our end, and I suspect that will continue. So that was me in conversation with Fabrizio Battaglia. Hope you really enjoyed it. I found it certainly very interesting in terms of like linking up the stuff that we do around residence and also how it works in other jurisdictions. I think one of the key takeaways I took from it, that's perhaps a contrast to how things work in the UK, is that the linkage between visas and tax regimes in Italy is quite significant.
Yeah.
So one of the things that Fabrizio was talking about was, so for example, like with the client that we've helped, she went on an investor visa,
Yeah.
but then and that lasts 5 years, and then there's a tax regime that comes with that once you've made your investment.
Yeah.
Or you could be on a digital nomad visa, and then the tax regime is different again. Or you can be on one of these visas to take advantage of the pension benefit, which are quite interesting. So
Yeah.
so that was one where essentially, if you go and live in certain parts of southern Italy, if you get pensions, dividends, and capital gains, in fact, it's all just taxed at 7%.
Yeah.
And I actually spoke to a client probably 6 months ago, and they were looking to take advantage of that. And
Yeah.
when you think about it, if you've got a significant pension, being taxed at 7% and like living outside Naples feels like quite a nice
Yeah.
approach to take. But no, really interesting. I think Fabrizio made the point that we always make, which is that if you're thinking about relocation, always speak to advisors first, so you
Yes.
know what you're doing, because it
Yeah.
is that classic thing of if you get it wrong, you
Yes.
can't unget it wrong in that sense.
Yeah. And it's kind of the same in the UK. We don't necessarily have the link to the type of visa versus how you would be taxed. But the way the statutory residence test works, once you spent too much time in the UK, you're a tax resident, whether
Whether you
wanted
like
to
it
do
or not.
Yeah, yeah,
Yeah, and it's that whole point of like, it's not something where you can like elect to be tax resident somewhere. And he made this point as well about the nuance between treaty residents and domestic residents,
Yeah.
which is always a point that I think sometimes unpicks people.
Yeah.
So yeah, that was interesting. And as I say, first of many, we hope. And yeah, please like and subscribe, and we'll see you next time. Thanks for listening to the Tax Compass podcast, brought to you by LSR Partners, where we help you pay the right tax in the right place at the right time. Book a call with us. Details are in the show notes.